Hi, and welcome to Trading with That Fear. So in this episode, I want to go over emotions during trades and how do you actually handle your emotions during a trading session. And one of the number one things that I always hear on the internet is the best way to trade is to trade like a machine. So one of the best ways to actually do your emotions while you're trading is to acknowledge them first. If there's anyone out there who's familiar with meditation, sometimes when you're meditating, you'll have a thought come to your mind or something that will come up, and the best way to deal with that is to actually acknowledge that it's happened, kind of feel that type of emotion. Don't get lost in thought and let it, kind of pass over you. And it's kind of the same way with emotions during trading, is when you're in your trade, it's okay to be fearful. It's okay to feel excited. And, as long as you're not let that excitement turn into greed, turn into, I guess you can say, lust for more money, it's okay to feel that kind of rush during your trades. I do think that for a lot of traders, especially early on in the trading career, it does take time to actually get used to that kind of adrenaline rush and that kind of excitement that you're right on the trade, especially if you're having a boom and bust cycle of where you'll have several wins in a row or a couple of wins in a row and then a big loss or several small losses that add up into eat away your entire profits for the week, day, month, or whatever the case is. It's kind of normal to kind of feel like you're getting the hang of things as far as your trading. And when you're trading, it's okay to actually experience that kind of rush. And if you're coming off a losing streak, or if you're coming onto a losing streak, sometimes having that fear of, am I going to be wrong on this trade, is also kind of normal as well. Especially if you've had 3-4 trades in a row where you've been wrong. It may actually be the next time that you get into a trade, you may also feel like this trade's going to be wrong, and it starts to work out right, and it starts to go down and eat your money away, and you automatically kind of feel like your emotions are being fearful because you don't want to be wrong on the trade. Now, sometimes, depends on how you are mentally, you may actually turn a winning trade into a losing trade by desiring more money, or you may not want to admit that you're wrong in the trade, fear of being wrong, and you end up making yourself more wrong than what you would have originally just by cutting it. If you think about the casino, if you think about let's say a slot machine, when you put your money into a slot machine, the outcome that you're expecting is a random outcome. You put in your dollar, pull the handle, the wheels spin, and it presents a pattern, and whether or not that pattern makes it that you're going to be a winner or not is completely random. And if you put your money into a slot machine and you lose money, it doesn't tap you into the state of mind that you're a loser or that you chose the wrong stock. You just put another dollar in the machine, you pull the handle again. And at the same time, if you put $1 in the machine and you win, even if you win the jackpot, it doesn't trip you into the state of mind that I was right. I knew what was going to happen. And so I think that a lot of times when traders are saying you want to trade like a machine, it's kind of a way that they're talking about trading in probabilities. Each pattern actually presents itself with a statistical and repeatable win rate. And that win rate is very kind of similar to like a win-loss ratio of a slot machine. In this instance, with a slot machine, it's rigged in the favor of the house, and it's actually rigged in the favor of the casino. The patterns that present themselves are basically puts us as the house and allows us as traders to determine what the probabilistic outcome is of that trade. And being emotionless on the trade is trusting the system that you've already kind of established. I've already did a video on profits over profits, when I call system over profits. I trust in your system that actually over time will make sure that over time you're going to be consistently profitable, versus kind of thinking that this trade has to work out or this type of thing. And I think that a lot of emotions that come from trading stems from the aspect of our expectations, the outcome of what we desire from the trade. And an expectation is a mental representation of something that we want to see, feel, touch, or smell in the near future, whether that's in the physical environment where we can see like the car, we can actually feel the car, or something that we could expect from the market or expect from our spouse. An expectation is either going to be fulfilled, which will put us into a state of mind of fulfillment or acceptance or happiness, And if our expectations are denied, or the environment that we're operating in doesn't fulfill those expectations, we can start to feel really bad. It can trip us into a state of mind of being, a loser, or not worthy, or various different things. And in the market's perspective, the only thing it has is up and down ticks. The only thing that the market does is give us an opportunity to make money, and us as traders put on the emotions onto the trade based off of what we're seeing and our expectations of that trade. So when people are talking about trading like a machine, think about it more of like a slot machine and the probabilities that slot machine has. Again, the slot machine's probabilities are in the house's favor, meaning that over a series of times it will give gamblers enough of a win ratio to keep them putting money into the machine, but eventually they're going to walk away with an empty pocket. Instead of you actually have to put money into this machine, what you're doing is you're pulling onto the handle until a pattern presents itself. And if you're a good gambler and you know that pattern has a higher chance of the next couple of spins, or that next spin being a winner, then you can put your money in the machine, pull the handle, and either gives you a winning spin, or you just lost that dollar. That's kind of the same way that the patterns present themselves in the market. They're basically just a higher probability of something happening, a higher probability of in your favor, whatever your pattern is, whatever your edge is. Allow yourself to feel those emotions. Don't get lost in the thought process of those emotions. It's okay to have an emotion, but kind of let it wash over you, and just kind of acknowledge that it's there, saying, I'm feeling fearful, or I'm afraid that I'm going to lose money on it. And write that stuff down. I do recommend, and I've mentioned in other videos, to actually have a trading workbook, something that you can write down your thoughts and feelings while you're in the trade, or if you're in trades and they're really fast. I know some traders can get in and out of a trade within 10-15 minutes, and it's really hard to write down something while you're trying to watch the stock. After you get out of it, while this stuff is still fresh and in your mind, and you're still feeling those emotions, take out a journal and write down the ticker, the date, and your thought process, what you're feeling throughout the trade, what was going on, and review it. If you're trading, you should be reviewing your stocks at least once a week, or I think at least minimum once a week. Some traders do it once a month, some traders do it every 2 weeks. And if you're doing that, you can also read through that notebook and start to realize that you're having similar thoughts, you're having similar feelings, you're having similar type of things, and some of those behaviors may actually be self-sabotaging. And so when you're actually trading, you can recognize, hey, I'm starting to be fearful that the market's gonna take my money away, and so I end up taking my profits really early, when oftentimes when that happens, it ends up going another 10-15% up, and I'm leaving money on the table. Now, over time, you may start to recognize some of these complications and start to fix that, which may also create other complications, such as fear of losing money or leaving money on the table. Fear of losing your money could turn eventually into leaving money on the table. It's happened to me, where I was cutting my winners really quick, and then when I started holding on to stocks a little bit longer, that turned into, I want to take as much of the move as I possibly can. And that also is really useful to use a trading workbook, because then you can actually use a different mindset and recognize the type of trading style that you're doing and the mindset that you're in, and kind of correct those behaviors over time, versus just kind of forcing those emotions to go away and trying to force yourself to be what a lot of people perceive as emotionless, which all it does is kind of bottle up those emotions. And what you end up doing is, when you're bottling up emotions, you're kind of ignoring the market. Think about it like this: if you get a bill in the mail and you don't have the money to pay that bill, what a lot of people will do is they'll just kind of put the bill off to some random location in their house, a cupboard, or wherever, and they ignore that bill. And then they get another bill and they do the same thing. And ignoring your emotions while you're trading and not acknowledging how you feel while you're trading is kind of the same thing as the bill. You're completely, bypassing the fact that you need to pay these bills, and you're forgetting about it. And while you're trading, by not actually feeling your emotions, you're not really gaining the full understanding what the market's perspective is. Sometimes the market could be screaming up in your favor. It has a small pullback, and out of that pullback, you're being fearful that it's going to completely not work, and so you cut your trade, either take a small loss, a small profit, and it ends up working in your favor. When if you would have had the emotions and allowed yourself to feel those emotions, you may have recognized that the market is just making a higher low. and it is still working out. It just, moved up too far too fast during that move, and it needs to have a small correction to actually continue going up. Don't try to stuff them down. Don't try to actually ignore them. If you're trying to ignore especially if you're an emotional person, kind of just let them wash over you. Kind of accept that you're feeling that and just let it go. And if you get another emotion, accept that and let it go. And I do think that's one of the reasons why the trading workbook works really well, is because you're actually, in a way, releasing that emotion on the page. You're allowing yourself to fully relive that emotional state and, kind of embrace it, whether you're in the trade or out of the trade, but you're allowing yourself to fully immerse yourself in the emotion. And kind of in that real-time moment, you're also allowing yourself to deal with it. Trading is an emotional game. 90% emotional, 10% is physical. And they think that the best way to trade is to not have emotions. So they suppress those emotions, which causes anxiety. And one of the ways that I've learned how to deal with anxiety, and something that I've kind of come up with on my own, was an anxiety is an emotional response to something that we haven't learned how to deal with emotionally. And oftentimes that's something that hasn't happened yet in the future, some sort of future moment that we're either fearful of or something that we're anticipating happening. And so going and coinciding that with trading is when you're in a trade, if you're a new trader and you haven't developed a system, sometimes that anxiety can come from the lack of confidence in your system and in your abilities to actually recognize that what you're doing is correct. But if you do have a system and you're trying to develop a system, I do think that having a trading workbook, which is an emotional journal that you keep with you, and you either write down your trades while you're in the trade or you write down your trade after the trade, while you're still actually remember the emotion. I wouldn't recommend trading all day long and at night after market close, write in your journal. If you're in a trade that's really quick moving and you're in and out of it within 10 minutes after that trade's done, write it down in the journal. If you're in a longer term trade of where you're either writing it down, let's say a swing trade, it's over multiple days, you can write down daily of what you're actually feeling in that trade. Or if it's a couple of hours, a couple of, half an hour long trade throughout the day, you can still write down what your thoughts and feelings are every single time that it arises during that trade. And for myself, what I find that what it does is it allows you to actually relive the moment of the emotions. You're having to think about what you're feeling. You're having to actually acknowledge those feelings. You're letting it wash over you, and you're learning over time of how to deal with those emotions. And so when they arise in real time in the markets, you kind of de-energize those, and which also over time helps you with having less anxiety while trading. And so when you're also starting to develop a system, the more you gain confidence in that system, the more you gain confidence in your ability to trust your system and trade that system without fail, the less anxiety you'll also feel. Doesn't mean that you won't feel excitement if the trade is working. Doesn't mean that you won't feel any sort of fear or any sort of emotions while trading. It just over time you learn how to deal with those emotions more appropriately, and you won't have the same emotional response to a person who doesn't allow themselves to feel those emotions. So that's it for this episode, and some of these tips have helped me a lot throughout my trading career. I hope they help you. If you do like this type of content, please like this this video and subscribe to the channel. More information will be coming out pretty regularly. And follow my journey on that $130 challenge. The way that I trade is using Tim Sykes and Nate from Investors Underground. I use their patterns, but I did learn how to trade mostly from Paula T and Mark Douglas.